Hey traders, welcome to How to Read Price Action. Today's video is going to be a massive amount of information. These are all going to be topics that we go over in more detail in later videos in the course. So just be prepared with a pad and pen. Make sure you can take some notes if these are all new concepts to you. Because as I said, there's going to be a lot of information in this video, but it's not meant for you to retain everything you hear in this video after the first time watching it, especially if you're new to trading. If you're someone that's brand new to trading, you'll probably have to go over this video a few times before you understand each and every concept that we discuss. Also, we're briefly going to be talking about trending markets, consolidating markets, and reversing markets. We'll also briefly go over the topics of breakout trades, counter trend trades, and retracement trades throughout this video. But again, this is going to be a load of information just to get you familiar with the concept of how to read price action. And then we'll be diving into some more detail on each of these topics later on in the course. So let's go ahead and start the video with this. What does a market, what does price action do? What are the ways that price action can actually move? Well, something that's helped me in my own personal trading is simplifying it as much as possible. Simplifying price action as much as possible, because price action is something that can be extremely subjective and pretty difficult to master. So whenever you simplify it by breaking it into smaller categories, it can make it much easier to understand. And that's what we've done here. So what does the market, what does price action do? Well, it either trends up or down, consolidates, or is in a position to reverse. These are all things we're going to go over in today's video briefly, and then again, we'll be taking a look at these in more detail later on. But this is what the market can do. It can either trend, meaning making higher highs and higher lows, or vice versa, lower lows and lower highs. It can consolidate and just move sideways, or it can be in a position that gives us an opportunity to trade a reversal. Now in today's video, we're going to be talking about each of these conditions. We're going to be defining the rules for each of these conditions, and we're also going to take a look at how we can trade based on these conditions. So breaking it down again into really simple form, we have three different conditions the market can be in. We have trending, up or down, consolidating, moving sideways, or reversing, putting us into a position to capture a reversal. Now, with these three things in mind, the three ways the market can move, we also have three ways we can trade. The three ways we can trade are breakout trades, counter trend trades, and retracement trades. Now, for each of these three conditions the market can be in, they each have different ways that you can trade based on those conditions. So let's briefly go over that. For an up or down trending market, we can trade three different ways. We can either trade a breakout, counter trend, or retracement. And for right now, guys, discount everything to this side. We're going to go over each of these one by one to make it easier for you to comprehend. So don't even worry about consolidating markets. Don't worry about reversals right now. The only thing we're going to be paying attention to is a market that's trending up or down. Before we begin with the breakout, counter trend, and retracement trades that can take place while a market's trending up or down, let's go ahead and discuss the rules for a trending market. And we'll go ahead and do this with an uptrend. So market being in an uptrend, the way we're going to define that is a market pushing up into a high, pulling back into a higher low, pushing up, breaking above that previous high, back down again into a higher low, breaking above that previous high. We're doing this over and over when the market's in an uptrend. What are some rules? And again, guys, this is going to be a brief overview of this. We're going to go into more advanced training on trending markets in the next video. But to briefly go over this and get you familiar with the lingo and familiar with what we're going to be talking about in the next video, what we're waiting on is to see this market break into new highs. Here was our previous high. And as long as this market stays above this low, so what would we define this low as? This low is the lowest low the market created before breaking above resistance. So we have that lowest low pointed out. The market then breaks above resistance. As long as after this break above resistance, say we get a candle close right here, as long as after this break above resistance, the market stays above this previous level of support, we're considering this to be in an uptrend. So again, guys, as long as the market stays above the lowest support before the break of the previous resistance level, then we're considering this in an uptrend. And I think I want to draw this a little bit bigger to make it easier to see and understand. So let's do that. Again, discount all of this, just looking at up and down trends. Let's draw this uptrend out one more time. Right here in this specific situation, this market would be considered in an uptrend, right? Because we just broke above our previous high. And until we break below the low we have right here, the lowest low before the break of this resistance, so the market can pull all the way down to here and still be considered in an uptrend. And as long as we don't break below that previous low that we've pointed out, and we get a break of resistance, then we're considered to still be in that uptrend. So I hope that makes sense to you. Again, we're going to go over that multiple times throughout this course. We'll look at it again in the very next video, but that's what we're looking at as a trending market. And to briefly go over the opposite, which is going to be a downtrend, we're looking for the market to be pushing down, pushing down, pushing down. Now see if you can determine which point we want the market to stay below to still consider this market to be in a downtrend. Well, again, let's take a look at our most previously broken level of support. There's that level. What is the highest resistance level before the break of that support level? Right here. So this is the level that we want to see the market stay below to be able to consider this market still in a downtrend and to be able to consider this market still trending. So what we would be looking for is a pullback that doesn't break above that previous resistance level and then trend to continue by breaking below the previous low. So this is the way we're going to be looking at trending markets. Now that we've defined that, now that we've taken a look at trending markets, let's talk more now about breakout trades, retracement trades, and counter trend trades. We'll do this with an uptrend. We have an uptrend here. Say the market puts in a move like this. We have our previous high, we have our previous lowest low. We know that as long as the market stays above this level here, we're in an uptrend. In order to trade a breakout trade, what we would be looking for is either some type of simple pattern, maybe we're looking for a flag pattern like so, to break out, or just a break above resistance. Say here's our previous resistance. As soon as the market breaks above that, we could open a position, stop loss below the previous swing low, and expecting trend continuation, something like that. Again, these are just examples of the ways we could trade based on these three different types of trades we can make. So we have our trending market, we have our breakout trade. What's another way we can trade a trending market? Well, we have a trending market. We can trade a retracement. Again, we broke above a previous resistance level. Until we break below this level, we're considering this in an uptrend. So if we get a retracement, pulls back down, let's say to our previous resistance level, and then we get an entry reason there, that would be an example of trading based on a retracement. And one other way we can trade based on trending markets is a counter trend trade. So how would we trade a counter trend trade? Let's say we have a market doing something like this. We're in this uptrend. We're still considered in the uptrend, but we take this double top trade right here. That would be an example of a counter trend trade. So really, it becomes extremely simple whenever you think about price action in this way. We have three different things the market can do, which is trend, consolidate, or reverse. And in a trending market, we can look for three different types of trades, which are breakout trades, retracement trades, or counter trend trades. And guys, these can break down into infinity different strategies. You can make up breakout trades with indicators, with different ways of using price action, simple patterns, different methods of breakout trades. You can make counter trend trades with RSI, previous levels of higher time frame structure. Infinity different strategies can be made for breakout trades, for counter trend trades, and for retracement trades. But it makes understanding price action much more simple whenever you break it down like this and you see that you can only really trade based around three different types of trades, which are going to be breakout, counter trend, and retracement for trending markets. Now let's move on. Since we briefly went over the up and down trending market and how we can trade that, let's take a look at consolidation. So periods of consolidation would look something like this. It's when the market has a low and a high, and we stay in between that low and high with price action, right? That would be a period of consolidation. When we're staying between a resistance and a support level, then we are considering this market in a period of consolidation. How can we trade that? Well, we can trade that based on counter trend. And what that would be is just taking trades at previous resistance or at previous support. That would be an example of counter trend trades in consolidation. The reason it would be counter trend is because while we're in a period of consolidation, we're not really trending. So in consolidation, we can trade based around counter trend or breakout trades. And after going over the trend continuation breakout trade, I'm sure you already know exactly what to expect here. In order to trade breakout trades after a period of consolidation, we're waiting on a breakout of that period of consolidation. Exactly what it sounds like. And we can trade based on that or based on a pullback after the breakout in anticipation of the market to continue in the direction of that breakout. So again, breaking consolidation down into two very simple trading opportunities. When the market's consolidating, we can trade two different ways, either counter trend or breakout. Something else that's considered a counter trend trade is advanced patterns. If you're familiar with that, this would be similar to an AP1 pattern, which is what I refer to this as. It is a similar pattern to an advanced bat, but here that would be a counter trend type trade if we had an advanced pattern. And last but not least, we'll go over a reversal situation. This one may be quite confusing for those of you who are brand new to trading, and it could get quite confusing if you're not extremely good at price action. But again, we're going to be going over these more later on in the video. This is meant as just a big brief overview of how to read price action. So let's talk about a reversal situation. Say a market is trending up. In order to capitalize on a reversal situation, what we're looking for is what I refer to as a 1, 2, 3 move. We're looking for 1, an impulsive move down right there, 2, the retracement back up, and 3 would be another impulsive move that breaks below our 2 support level. So once we get the 2 support level before the pullback, 3 breaks below that support level, we have this 1, 2, 3 move. Now we're in a position where we can trade the possible reversal scenario. At this point, the market's told us that it's possibly going to reverse, and in this reversal scenario, we have two types of trades we can take. We can either take a breakout trade or a retracement trade. An example of a breakout trade would be after our reversal condition is met, we have a 1, 2, 3 move. The market pulls back and then breaks out to the downside. Something like that happening. If that was the case, then we could look for that breakout opportunity. Or if we ended up with some type of flag pattern here before the breakout, that would be another example of a breakout opportunity. Another way we could look at trading the reversal scenario is retracement trading. How would we do that? We'd wait on the market to pull back, possibly into previous support here, possibly all the way back up into previous resistance, anywhere in there, looking for a possible retracement, pullback entry, or trade. And that's how we can capitalize on reversal situations. So again, guys, breaking it down, doing another overview of this, the market moves in 3 different ways. It either trends up or down, it consolidates moving sideways, or reverses with the scenario we just discussed. Throughout these 3 market conditions, we can trade 3 different ways, either breakout trades, retracement trades, or counter trend trades. For uptrend, we can trade based on all 3 of those. For a downtrend, we can trade based on all 3. For consolidation, we can either be trading counter trend or breakout, and for reversal trades, we can trade based on a breakout after the reversal scenario has happened, or based on a retracement after the scenario has happened. Now that we've discussed all of the rules based around these, what I'm going to do is take you guys down to some real price action and a real chart, and we're going to look at some examples of each of these to help ingrain it into your mind a little more. Again, if any of this was confusing, be sure to go back and rewatch this video. Feel free to go back and watch this section of the video first before moving on to the examples on the chart. But that's what we're going to go ahead and head to now. Let's go ahead and head down to a real chart and take a look at some examples of an up or down trending market, of consolidation, and of reversal situations. Hey traders, so here we are on the Canada Yen 4-hour chart, and we're going to be talking about trending markets. And this specific market is trending down. We're actually going to apply the rules we talked about earlier in the video to this real market, and also discuss pullback, breakout, and counter trend trades on this pair. So what we have here is a starting point, right? The market starts here, we break into new lows, breaking into a downtrend. Now, again, just looking at this on candlesticks now instead of with lines to make it a little bit easier, after we get this move down, we look for the pullback, and what are we waiting for? A break below this level of structure, right? We're waiting for a break below our support level. We get that break below our support level right here. And now what has to happen for us to consider this staying in a downtrend? For us to consider this a trending market in the downward direction, we need this market to stay under the highest resistance level we were looking at before the break below that support level. So hopefully seeing this on a real chart can make it a little easier for you to understand. So as long as we stay below this previous resistance level here, then we consider this market to still be in a downtrend. And what happened? Well, this market pulled back and then continued in this downtrend way before even pushing up to our previous resistance level. At this point, what do we need? We need this level to remain intact and not be broken above, like so, right here before continuing in the downtrend. And what happened? We got the continuation, then we need this level to stay intact. We get a push up, and then we get another continuation, break below, close below. We're waiting for that to be broken, this level of support here to be broken before this level of resistance is broken. So what do we get? We get the pullback, a break and close. Now what are we looking for? This is our resistance that can't be broken. Before this level of support must be broken, what happens? Pullback, break into trend continuation. We're waiting on this level now. Can't be broken, and we have to have this level be broken. What happens? Break into trend continuation. Now that we see the rules being applied on real markets, again, hopefully that makes the rules easier to understand for trending markets. We're going to go over that much more in the next video. But now let's talk about how to trade breakout, pullback, and counter trend trades based on price action, because these are the three ways that we can trade up or down trends. Well, a pullback is quite easy. Here we have our push down, push back up, that break putting us into a downtrend. What happens directly after that? We can look back here at previous support. This market pulls back up into that previous support level, giving us a possible pullback trade. We'll label pullback with PB. So possible pullback trade there. Market breaks into new lows. We can look yet again at previous structure support. Looking here, that oftentimes becomes resistance. When reading price action, you'll come to understand that as you practice. And as you can see, this market pulled back up into that previous support level, giving us another pullback trading opportunity. Now, as for breakouts, this market pushes down, breaks into new lows, putting us into a trend continuation for this downtrend, then creates this really nice flag pattern. This nice flag pattern is followed by a breakout and push lower. So this would be considered a breakout trade. We'll label that with BO. So there's our breakout trade. Again, we can see another possible breakout trade here if we consider that as a flag pattern looking like that. This here would be another example of a breakout trade as we continue in this downtrend. This also could be an example of a breakout trade looking at just the break of that previous support level. So here are some examples of breakout and pullback trades. There's only one other way we can trade a trending market. When the market's in a downtrend, we can trade counter trend, expecting a counter trend move out of this market. And we'll take a look at that in just a second. Now guys, just knowing this is not going to make you successful. What we're doing is briefly going over some really simple concepts that should help you better understand price action. So again, with an up or down trending market, there's three different ways of trading. We just took a look at pullback trades and breakout trades in a very, very simple way. Later on in this course, we'll be going over real strategies that we create based on knowledge like this in the advanced sections. But right now, we're just looking at general knowledge of how to read price action. An important rule to note is that previous structure support does often become resistance, and if it does not, then previous structure resistance can often become resistance as well. Let's go over that concept really quickly. So here we have a push down, push back up. Our resistance is here. Push down into support. The two levels that are going to be most powerful in our trading is this previous level of support or this previous level of resistance. So if this market was to retrace all the way back up to this resistance level, that would give us a good opportunity for trend continuation as well with pullback entries. Again, we're just briefly going over some separate concepts with price action. And now that we've talked a little bit about trend continuation trading based around breakouts and pullbacks when in the up or down trend condition that we've created rules for, now let's talk about counter trend trades. If I scroll the chart to the right, you can see we have a situation here that we may be interested in taking a look at as a counter trend trade. So just looking at the right edge of my screen here, you can see that this market came down into this level. And for argument's sake, let's consider that this is a previous daily level of structure right here. My black line I just drew. Let's say that's a previous daily level of structure. Well, at this level, the market comes down, puts in a bottom, a move up for a neckline, and a move back down for a double bottom. This is a situation that we could look at as a possible counter trend trade while in a trending market. Let's delete the drawings here. As we know, we're entering based on this double bottom. So after deleting those drawings and pulling the chart sideways, you'll see that that counter trend move would have been a successful one, pushing us up into the previous level of resistance. Something else to really consider with price action, especially with counter trend trades, is that we're not expecting a reversal out of this market. We're more so expecting this market to make it back up to previous resistance with counter trend trades. So it's important to take profits off early with counter trend trades. That's something, again, we'll get into in much more detail later on, but this is a way of trading counter trend based on up or down trends. So now that we've went over trading based around breakouts, pullbacks, and counter trend trades in trending markets, let's take a look at a consolidating market, go over the rules for that once more, take a look at how to trade that, and then at the end of the video, we'll also take a look at reversal scenarios. Okay guys, so next up we're taking a look at consolidation, and here on the Eurodollar daily chart, we have a great example of consolidation. So the way we can define a consolidating market is a market that's bouncing around in between a support and resistance level. What do I mean by that? Well, I'm gonna scroll my chart to the right so that this is all we can see. At this level, what do we have on the Eurodollar? Concentrate to the right of this line. What do we have? We have a move up, higher low, higher high, higher low, higher high, higher low, and higher high. We have an uptrend. So if you said uptrend, you are correct. Let's delete these drawings, and considering we're in an uptrend, what do we know about an uptrend? Well, we know that as long as we stay above this previous level of structure support, that we are in this uptrend. Well, in order to define consolidation, I go ahead and mark off my previous level of structure support in this uptrend, and then I mark off my level of resistance, and now everything that happens in between these two levels is going to be considered consolidation. Let's scroll to the right so you can see what I'm talking about. As we scroll to the right, you can see that this market retests resistance, then comes down, retests support, then moves back up and is currently pushing up towards resistance, now back down towards support. This is how I define consolidation. Everything in between my most previous support and resistance level from the trending market we had. Again, we had this as an uptrend. This was in an uptrend, but everything in between here is going to be my period of consolidation. And in this period of consolidation, what are we waiting for? We can take trades off of this support level. Let's go ahead and delete these drawings to make this easier to see. Here's our support, here's our resistance. In consolidation, once we have some price action beginning to consolidate and move around in between these levels, we can take trades based off counter trend moves, which is the market getting up to previous resistance, previous support, or moves that give us a breakout. An example of that would be if this market pushes down and breaks out below our period of consolidation and below our support level. That would be considered our breakout trade. So here we have breakout trades along with counter trend trades as examples in this period of consolidation. So that's what we'll be looking at in consolidating markets. Again, consolidation is one of the three conditions the market can be in, and the two ways we can trade consolidation are counter trend or breakout. Next up, we'll move along now and go to our final condition the market can be in, which is a reversal scenario. And we'll take a look at a couple of different ways we can trade based around the reversal scenario. Here we're looking at the dollar Swiss, a 1 hour chart, and we're going to take a look at a really nice reversal this pair had recently. What we're looking at here is a market that was in a downtrend, right? We have a push down, lower high, lower low, lower high, lower low, and then what happens? We get a 1, 2, 3 possible reversal move. After this 1, 2, 3 move, what we're looking for is possible reversals out of the market. So when you're looking at market structure, this is what that possible reversal will look like. It'll look like a 1, 2, 3 move. And then after that 1, 2, 3 move, there's a couple of different ways. We talked about being able to trade reversals. One of those ways was a pullback. So looking at a pullback into previous structure resistance would look like that, or a breakout, meaning we could look for some type of flag pattern or just wait for this level of resistance to be broken and close below before looking for a trade. And the reversal scenario is something we're going to take a look at in a lot more detail later on in the video in the more advanced sections of the course. But again, this video was meant to just be a quick overview of all the market conditions and the ways to trade them to get you more familiar with how to read price action. So again, guys, for reversal, after the market's been in this downtrend, we're looking for that 1, 2, 3 move. If we get that 1, 2, 3 move, then we have two possible trades after that 1, 2, 3 move. They consist of either a breakout trade or a pullback trade in order to get involved after a reversal. And guys, that is how to read price action. That's how to read different market conditions and define it. That's some rules we can use to help simplify price action for us in our trading. And those are the 3 trading opportunities we can get from each of those market conditions. Now, I would suggest going through the market now and actually testing this for yourself, trying it for yourself. Go through the market with a line tool. Just grab a trend line tool and mark off swing high to swing low, your lower high, your lower low, your lower high, your lower low, then mark off your reversal situation. We have that 1, 2, 3 move after being in a downtrend. Then we have our pullback trade possibility. Then we have that break into new resistance levels. Scrolling to the right, waiting to see what this market does. We could get a scenario where we go into trend continuation here out of the dollar Swiss, which is what we expect considering that we have now put in enough higher highs and higher lows to be in an uptrend. So guys, take this information, go through the markets, practice it for yourself, test it for yourself. Take a look at how many times the market, whenever we complete the rules we have for reversals, whenever we complete the rules we have for trend and for consolidation, take a look at how many times they're accurate. How many times does the market continue in this uptrend before breaking below the previous level of support? You'll see that those numbers are actually quite reliable. And make sure that you master this skill of reading a price chart before moving on to the more complicated sections in this video. Just like the foundation of a house, these are the foundations to technical analysis, the foundations to what you need to know in order to become successful at trading based around technical analysis. So that's going to do it for the how to read price action video. Next up, we're going to take a look at how to read market trends. We're going to dive into a lot more detail about that. So don't forget to rewatch this video if any of it did not make sense, and I'll see you guys in the next one.